started here in just a moment and make sure I am doing all the things I need to do to make sure this is recording right for you. So looks like it. So I hope you're having a good day. If you're watching this, my name is Marissa Christie. I work with the Kentucky Center for Agriculture and Rural Development. We are based out of Kentucky, and we have many partners, including Virginia with Appalachian Sustainable Development and Appalachian Harvest. And we've partnered with them to do this series of webinars. So one of the things that we find with farms frequently is that they'll encounter a pinch point at some time throughout the year, generally of the spring or late of the winter, when their cash flow doesn't meet the needs, their spending needs. So I'm going to go ahead and turn off my video so you guys don't have to watch that the entire time. But so why work on your farm financials? Understanding how much you will spend, where and when you have sales, and planning for your financial year is an excellent risk management tool. If you don't know when you're going to spend what, and I realize this is not an exact science. It's really hard to make sure you don't run out of money. And I say this because I've unfortunately worked with businesses who have, and they come to me wanting a very quick loan, and that's the reason they start business planning. So the other reason to look at your cash flow and try to forecast that is, and it does help you identify areas that may pose a risk, such as being too dependent on one crop or market or one sale, and gives you an opportunity to step back and take account of when you can diversify it, when you can mitigate that risk somehow. All of those are questions that we're going to look at tonight. So how do you use your forecast to manage your business? When I say forecast, we're going to work specifically on a detailed monthly cash flow. So you can use it to help manage your business. You protect your farm and business from risk. And if you're looking for loan or grant funding, a lot of times they want to see that you are a sustainable business. They want to know that. And having a cash flow and other pro forma financials are integral in that. It doesn't have to be rocket science. This really doesn't. The easiest way to forecast the future is to know the past. If you have 3 years of records, that's great. That's usually what we start working with people. We'll say, like, how many years back do you have your records? So you think about not just your financial records, but your sales, your cost, your cost of goods, if you're thinking about, if you're doing vegetable production, I'm just going to talk about vegetable production tonight, but this works for cattle production, floriculture, it works for a lot of things. If you know how much your sales are, and you know the direct cost to get those sales, or the cost of goods sold, and you know your overhead costs, such as your farmer's market fees, or your utilities, or your cell phone that you're using as part of your business and your website. You may have an accountant cost. Those things feed into your financial records. At the same time, you need having your farm production records, and I'm not talking about every last I dotted and T crossed here, but knowing about what your yields of different crops each year and the prices you got for them, that's going to help a lot in looking at your future income. And lastly, your market channels. Where are you selling? What's going on? What's coming up in the future? How those markets have treated you in the past. So having that does help. However, many times beginning farmers don't have that, or you're looking at your detailed cash flow because you are expanding into a new venture and you want to see if it'll work out. So, that's why. So when we start talking about financial statements with farmers, there are 4 main things we focus on, which is a budget, what you plan to earn and spend, versus what you actually earn and spend. That's a household thing that most of us hopefully use. An income statement, which covers a period of time. Most of the time, an income statement covers a year. You can do it on a cash versus an accrual method. Most of us do cash accounting, which means we count money as it comes in and as it goes out. We don't count it based on we've got an invoice out for this and we have a bill for that. We do it based on when money goes in and money goes out. There's some key items in the income statement that we're going to use also in our detailed cash flow this evening. Your sales, your cost of goods sold, your expenses, and your net income. A balance sheet is a look at the value of your business at one point in time. It is basically what you own and what you owe. What you have put into the business should equal what the business has in it, if that makes any sense, and we'll go over that. Balance sheets will come out so that those two things are equal. A cash flow statement. So only and all cash transactions are included. The amount of cash you have equals the cash you have coming in minus the cash you have going out. This is not rocket science, but a lot of times when you hear people talk about financials, they talk about an income statement, a balance sheet, and a cash flow statement. Those three things are what you will see in most business plans. With a budget, I'm going to review each of these four things, then we're going to get into a detailed cash flow. With the budget, you have your, enterprise one, so maybe that's vegetables. Enterprise two, maybe canned goods, or maybe it's a farmer's market versus a wholesale. So here's how much we think is coming in. Here's how much actually came in. Here's the difference, and here's the notes about why. Doing a budget for your business makes a lot of sense, and you can even start out with a budget to get to a cash flow. And I don't think it's a bad idea. As a matter of fact, if you came into this having some idea of your budget, it's going to help you. Your expense items, feed, animal feed, seeds or plants, advertising, labor, fuel, utilities. So you take that and you subtract from the income, the expenses, and you get your amount left. And this is a good thing to do each year, just because you have an idea of what you thought it was going to be versus what it was, and you have a place to put notes of like, why are my utilities so high? Labor was, we managed to be really efficient in our labor usage this year. What did we do different than last year? So this is where a budget does come in useful. And if you're going to do nothing else for your farm for this coming year, for your farm business, I would really recommend that you make a budget. So understanding an income statement, we have here a really simplified income statement. So you have your sales. You subtract from that how much it costs you to get that cost of goods sold. So if you're thinking about this, if you're growing vegetables, your cost of goods sold may be seeds, transplants, any soil amendments or fertilizer, packaging, labor, like to harvest it, if you have that kind of labor, if you have transportation to go to the place you're selling it every week, things that are dependent, your cost of goods sold are things that are dependent on how much you grow. So it's directly related. The sales and the cost of goods sold are directly related. The more I sell, the more it's going to cost me to grow this stuff. And hopefully you have some efficiency as you get bigger. But generally, those two things are directly connected. When you subtract the sales minus your cost of goods sold, you have gross profit. Now you have other expenses. What are other expenses? Your yearly farmer's market fee, your accountant's fee. Maybe you pay for marketing and advertising. You had some promotional materials printed up. Your cell phone bill. All of those sorts of things come into other expenses. So when you subtract your expenses, that's your net income before taxes and depreciation. Most people won't include taxes and depreciation on their income statement if they're doing it themselves. So that's a basic income statement. So a balance sheet. This may be one of the hardest things for people to wrap their head around. So over here on your left, you have assets. This is everything that's in the business. So your assets include the farm, if you own it, any many barns, storage sheds, tractors, inventory you have on hand, jars you have on hand, all of that. Those are your assets. So the value of your assets should equal how much you've put into the business and any outstanding debt you have. So think about this. If you bought a tractor on loan, the value of the tractor is over here, and part of that is offset by the loan, the liability. What you've already paid on the tractor, we're not going to worry about depreciation right now, but what you've already paid on the tractor is some of your equity, money that you've put into the business. So the things you have should equal how much money you've put in and time and effort. I mean, that's part of it. It's not just how much you've put into the business and the debts the business has, the liabilities. So that's the basic of a balance sheet, is showing a snapshot of where your business is today. Many of the things like a budget and a cash flow statement, income statement, those will a lot of times have a year or more, and they're, especially a budget is a breathing document, like here's what I thought it was going to be, and then here's where we actually ended up this year. This is a snapshot. So your current assets, and you have fixed assets like barns and things. Same as, I'm not going to go through all this. So if you have any retained earnings, the cash in the beginning of the year, if you're dealing with a larger business, you have some capital stock, those things are equity, money paid into the business. So for an example cash flow, this is if you were doing one just for a year. We're going to break this down a little, but this is actually called a source and use of funds, which I like better than saying cash flow. So where does it come from? If you got a grant, that's going to count your cash flow. If you have a loan, if you're getting a loan that year, and you know you're getting a loan, that comes in. If you have a line of credit, maybe to be able to plant in the spring, that cash is going to come in. The income you have throughout the year before that's depreciation and interest. Any money you put into the business counts as cash flow, and then there's kind of the nebulous other sources. So that should be everywhere the funds can come from. Funds don't magically appear. We call that grants and owner investment. Those are the only two places. And that's not magic. One of the things we're looking for tonight is to make sure you don't get a surprise need of having an owner investment. So use of funds, maybe you have to pay for an automobile or a tractor. Maybe you are building a building this year. That's going to cost some money. You need to buy some equipment. You repaired some land. You had to pay back some credit, other loan payments. If you had to do some sort of pre-development work, or if you took out money to pay yourself an owner's draw. Those are all ways to use funds. So you'll notice on, so here it is, beginning cash balance plus the source of funds minus the use of funds is the funds generated. So you have your total source of funds minus the use of funds is your funds generated. And that should take you from your beginning cash balance to your end cash balance. This should account for any way you can earn or spend money for the business. There's no nebulous, oh, we own a barn and we think it's certain. No, this is how you earn and spend money. This is what a cash flow statement is. So how do you estimate this on a monthly basis? Let's pretend that you don't have 3 years of records, and you certainly don't have 3 years of records of how money came in every month and went out every month for 3 years. And the idea of going back through and figuring that out makes you want to turn the webinar off. That's not what we're here for. We can estimate this. Perfection over paralysis. You do not need to worry about perfection and paralyze yourself. Your cash flow is not a rocket ship. Perfection isn't necessary. At the same time, do put some good thought in this. It's garbage in, garbage out. the information is only as good, the results are only as good as the information input. So if you've only sold $100 of tomatoes most Mays, most of the time in May we sell about $100 of tomatoes because one good weekend sell at a farmer's market. If without any change to your farm type or more interesting utilization of high tunnels or something, you decide that we're going to sell $4,000 of tomatoes in May, that's kind of a garbage in situation. So you need to really think about how realistic the numbers you're putting together are and try to break them down. Before you start, know your bank account balance as of January 1. If you don't know that right this moment, that's okay. Actually, what I would love for you to do right this moment is to get a piece of paper if you don't have one already. We do not make spreadsheets for this because they're hard to fill out and individualize. We do work with people individually on this, so please contact me and we will help you out. So anything, your balance as of January 1, 2020. What's your business account balance? Or how much money are you, I'm hoping that you're keeping separate bank accounts, but maybe you aren't. So how much money is the business going to start with this year? Because it needs to start with something. Any bills that are outstanding or any invoices you have out, and when you think those are going to come in? How much do people owe you, and what is the expected payment month? Any expenses you incurred last year that will be due this year. This is a cash flow statement. This is not an accrual method, but we want to think about if we know we have a bill for $2,000 in February, we want that maybe on the cash flow. So here's the goal. We're going to understand your source and use of funds. Where the money's going. I think that most people are really nervous about doing this because when you don't know something, it's much worse than when you know it. If you know where your money is coming from, if you know where your money is coming from, it is much in going, it gives you more control. But when people don't know and they're not sure about their business, it can make them hesitant to examine things. That's actually, I've had more than one person who says, if I just give you the numbers, can you figure them out, because they're scary? And it's not because they can't do math. It's because they're afraid that the numbers won't add up and it's not going to be a profitable business. Not knowing is scarier than knowing 95% of the time. And you're thinking right now, maybe I'm in the 5%. You probably are not. And if you are, we're going to look at how to make it look better. Like, not look better, but do better. So understand how your money's going through, and then look at where are the lean points. Where are the critical, like, if this piece of the bridge breaks, if this doesn't go through just right, I'm going to be $2,000 in the hole in April. Where is that? Then look at ways you can help that and prepare for unexpected circumstances. It's farming. There's always an unexpected circumstance. Sometimes it rains for 5 months without letting up for more than 2 days. That actually has happened. That happened last year for some of my farmers. So that created some unexpected circumstances. Okay, you see here someone's paper. This is actually, I get really tired of looking at spreadsheets on screens. Sorry. So here you can see that there are different ways you can divide up your sales. I want to thank you. This is a very simple sheet. This does not have to be rocket science. I'm more than happy to set up a spreadsheet for you and help you walk through it. But if you're watching this video right now tonight and you're like, how am I going to do this? You're going to write source of funds and write the months, draw some lines, or maybe you have some graph paper. I didn't want to intimidate anyone by using the trusty graph paper, and also it's a valuable asset that I really enjoy. So look at your sales. Okay, this is a detailed cash flow statement. So we're going to get more into how we got our net income. So okay, maybe we're selling kale. We're not selling kale at the farmer's market in January because there isn't a farmer's market in January in the rural area that the pretend farm is located in. But we are able to sell kale to a restaurant. Kale grows a little slower during this part of the year, so cost about, we only sold about $200 a week in January for $400. You're wondering how, I have no idea how much kale. Well, how much do you think you'll sell each week on average? Go for a low average because I'd rather you think you're going to have a lean time than think you're going to have plenty and then it falls through. Move on to February. All right. We have a little more kale. We sold $1,000. March, $1,200. Divide this, however, maybe it makes sense for you just to talk about a farmer's market and a restaurant and not divide it by crop. This farm is doing 2 main crops. So they divided it out to kind of see where it would go. See, they start out their farmer's market in April. They sell a little kale. Maybe I should just put greens. I think I was having a kale salad the day that I made this up. And then if you look at tomatoes, right, they have a few early tomatoes at the farmer's market, something this farm prides themselves on. And you can see once tomatoes come in June, that they're selling to a farmer's market, they're selling to a restaurant, and they have a wholesale outlet. So here they've done the beginning of their source of funds, their sales. So you can estimate it based on the past, break it down by month. You can do it by product or by market, whatever makes sense to you and allows you to estimate it. If you know how much you've sold at the farmer's market every month and how much you've sold wholesale, and you want to try to, or about how much, that probably makes more sense than breaking it down by crop. But if you're not real sure, or you're expanding, or you're a beginning farmer, and what I do, you lose a little bit this way. But I just always assume there's 4 weeks in a month when I'm doing a cash flow for someone. There's technically 4.2 weeks in a month, which means that you're losing a week about every 4 months. But it does keep you like thinking of like, okay, so if I sell $200 of kale to a restaurant every week, minimum. That's the most I think that's what I think I can sell in January. It's $800. So breaking it down like that, 4 weeks to a month, thinking about your outlets and how much you'll sell there each week is a really good way that I've walked people through, or I think it's a good way that has worked walking people through estimates. What you have to watch for is getting too optimistic. I don't want to be the Debbie Downer, but keep it real, garbage in, garbage out, but be prepared to estimate and have some zeros. Hey, maybe you had some numbers from last year and you can kind of true it up and be, my goal is to grow 10 or 20%. Go ahead, throw that goal down on paper. This is a good time to do that. See what it looks like. So I went ahead and put it in a boring spreadsheet. And this person also has a CSA, Community Supported Agriculture, which means they sell shares at the beginning of the season. The reason this farm, this pretend farm, started doing that was because they just didn't have a lot of sales up till May. And I thought, if I get people to prepay, that will help with some of my springtime cash flow issues. And that actually kept them from using, you can see on your left, owner investment and line of credit. They aren't planning on using that this year. But you can see they have each month the amount of income. And that CSA payments in the spring really help even that cash flow out. I know this is not an option for everyone. I have farmers that use maple syrup here that will store honey and sell it here, that sell value added products in November and December to help build up a cash balance for the beginning of the year. And I also have farmers that are really good at planning. Unfortunately, I also have a few that end up putting $1,000 more into the business every spring. I want to make sure you think about the fact that it's going in there on the owner investment line. So this is a source of funds example. This is not perfection. It's based on some generic farmers. All right, so here's some detailed cash flow items. If you're looking for your cost of goods, production expenses, this is where your seeds, transplants, fertilizer, all of those things go. I know it gets boring just looking at the screen, so I'll talk to you once in a while. So you have your production expenses, that's your cost, that's all those little things that you buy to farm every year that go away. That may include, if you're doing value-added jars, it can include packaging, you see packaging there, any delivery, and if there's an amount of commission that's charged based on you selling somewhere, that can go there too. Your operating expenses or your overhead. So those are your marketing costs, your accounting fees, insurance, what I call office expenses, you know, ink for printers, paper, postage, internet, any repairs or maintenance, and also supplies. So when I say supplies, I'm talking about like shovels. They're going to last a few years. They're not going to have any value on your balance sheet, but you're going to have to buy them every once in a while. So capital expenses, what's that mean? That does not mean that you went to the capital of your state or a nation's capital. That is actually when you do an improvement to your farm, such as new buildings or clearing some property, that sort of thing. And then another thing would be debt or loan payments. Those come out. Those are real. So that's your land payment, your equipment payment. Maybe you need to pay back a line of credit that you borrowed earlier in the year. You have that on your cash flow when it starts. So this is a giant spreadsheet. You can see here, I went ahead, I started with use of funds and keeping kind of the same farm in mind. You can see they have a lot of seed and transplant cost up through June. They've got some soil amendments, fertilizer, lime, don't know what they chose to buy. Packaging, they had to buy a little bit of packaging earlier in the year, maybe some clamshells or whatnot. And then, rubber bands for the kale. And clamshells, they got a good sell on clamshells. And then they had to buy a lot of packaging gearing up for farmers market and wholesale season. And you can see labor increases by month when you start harvesting. So these are estimates, your numbers. You may not have all of these expenses. My goal here is to get you thinking about all the things that go into your farm. Operating expenses, you're spending some money on Facebook with advertising. Maybe you have brochures printed, maybe some new cards. Probably have to bump some of these numbers up. You pay your yearly insurance, some product liability insurance here. You have to register your farm in May as a business. You have an LLC, so May or June, maybe you have to pay for your business license. You have office expenses stay pretty steady at about $30 a month. That may or may not be true for you if you do mailers or other things. In our pretend farm, the office was located in the house and had no separate utilities. Professional fees, maybe that's an accountant. You had to pay in May for your taxes that were done in April. Any farm machinery repairs, and then subscription and dues. Maybe you belong to a professional organization, farmers, or something along those lines. And then you keep hearing them have a land payment of $300 a month. That never changes. It just keeps going. At the very bottom, you have capital improvements. And this farm decided this is the year to expand the packing area. You'll notice that there was $5,000 spent in April and $9,000 spent in May. That's actually an adjustment that was made after we looked at the overall thing. Because when I first put 14 grand in April, they hit the negative in April. They were gonna go, so I was like, well, that may be the reality for somebody. They may use a line of credit, but could they put off some of the cost of the packing shed and pay it in May? So already, as I was entering the numbers, making adjustments, and that's probably what you're doing too, is like, man, that's going to be a lot of money in February. Is there any way we can push some of this to March until we get a few more weeks of this or that? It's not rocket science to figure out how to get your balance. You take your beginning balance. This farm had a generous $10,000 to start the year with. They sold $800 in January. They used $4,540 to get $6,260. Move that number up to February, the very next month, and repeat process. 6,000 minus plus 6,000 minus 4,040, $8,220. You repeat it again. So you just repeat this over. It's actually really easy to put this in a spreadsheet. You can do it by hand. Spreadsheets are great because as you adjust them, you can populate them through. If you need a spreadsheet to do this with, contact me and I'll send you one. It's kind of nice. So knowing if you do this through, you should have your ending balance by December. Apologies. So here I collapsed the little sheet down and put the whole year on there so you can see all the details of how all the funds came in and how they were all used. But here's the totals. You can see, look right here, May. You know, that $9,000 in packing shed really, it's going to make a kind of lean time right there, you know, and it's a time of year that you might be needing to do some things. So, you know, it doesn't make sense to have a line of credit ready in case everything doesn't go according to plan. What can we do about that time? What do we do if that was negative? Maybe we look at when we put the packing shed in. Maybe we just deal with the packing shed the way that our produce handling the way it is for another couple of months, and we put the packing shed in at the end of the year instead of the beginning, or plan it for before harvest next year. No one wants to put off the packing shed. No one wants a loan at 12% interest either. So if you have a predicted lean time, basic questions. Are there expenses that can wait until later? You can negotiate with a creditor if necessary. I really don't want you, we're doing cash flow studies, so you don't have to do that. This is to help prevent negotiating with a creditor. Are there things you can use? Can you borrow from FSA? Can you borrow from a local bank? Is there a CDFI, or Community Development Finance Institution, which covers, there are a couple that cover our entire area that you could use to get kind of an emergency operating loan. And they will, some of them, if you're less than 25 grand, they'll do it without a lot of questions. Just because if you have the plan, like, here's how I'm going to pay this back, you know, they're way more likely to let you borrow it. And since you've sat down now and worked through your cash flow, you're ready to answer their questions. Is owner investment an option? Sometimes it's not. And what we mean by owner investment is that I have a farm. I am going to be in the hole by $3,000. The farm is. So the farm's going to run negative in April. Let's pretend that's the scenario. Well, I have $3,000 to invest in April, and importantly, when will the farm be able to return that investment if I want to return, or understand that that is permanently part of the farm's equity? The ideal is that the farm is able to return that investment. If you are operating an LLC, you would actually invest in the farm and record it, because that's part of having a business that's separate from your personal. So if owner investment's an option, you can keep that door open. I hope that most people don't have to use that in an emergency unplanned situation, which again is why we are doing financial forecasting here, making a detailed cash flow for this year, because I'll be darned, we don't want to end up going to a bank begging for a loan at 12%, okay? So let's look at our, so look at your assumptions. In an example scenario, the CSA income helps stabilize cash flow. What options do you have? Are there value-added crops you could try to, value-added products you could try to sell. Is there a way to bring in any other income? Are there special events you could host on your farm if you're into agritourism? Is there anything, is there a crop that you're growing that will sell during that time that you have an outlet for? I don't want you to add something to your farm that doesn't make sense, but I do think having a farm that's diverse enough to make sure cash flow is not a completely restrictive thing that can keep you from farming the next season. Think about your options. I mean, I have people that use honey, maple syrup, eggs, depending on local regulations, value-added products, things you wouldn't consider, farm tours, learning days, all these different things that have helped. You know, maybe it's just $500 or $600, but it might make March look a lot better. Are there markets that you rely on heavily? Once you put all those estimates in, is there something that makes you go, man, that's 50% of my income. What happens if that falls through? It's no fun to think about this, but if you think about it now, you have a better chance of being able to come through it on the other side. Okay, so if this falls through, is there something I can do besides sell this produce to the lowest bidder? Is there an option besides selling it to a food bank, or giving it away, or not harvesting it all because it will cost me more money and labor than what I can make? So what happens if your market falls through? And the example I gave where the CSA was really, part of that cash flow, what if there aren't enough CSA orders? Do you have other places that you've considered expanding the CSA? Are there ways that you can cut back in expenses once you see the CSA orders aren't going as planned? If maybe by the middle of April you don't have half the orders you expected, do you scale back your labor force? So it's not just finding markets, this way to say, okay, if this isn't working, we can't hire that extra person this summer, which is no fun. I don't want that for anyone, but I really want you to be able to farm next year. And that's what this is making it so you can farm next year and you can make money at farming. And then realize that unplanned expenses happen. How will you handle unplanned expenses? Do you have a backup plan? Do you have money set aside in the business just for contingency plans? Do you have someone willing to do a lot of credit? If you don't know who your local community lender is or CDFI is, reach out to myself, reach out to someone else. Let's have that person's contact on hand now. Let's have already talked to them before we talk to them with our hair on fire because we need $12,000 tomorrow. So, and also, knowing who to call in case of an emergency is a lot of the battle. I have had farmers that use a technique I call being an ostrich, in which they stick their head in a hole in the ground and just hope it'll get better. I hate to tell you, having a negative number on that cash flow, pretending you're an ostrich and hiding from it, generally does not make that number go away. Actually, it increases the issue. So the hope is that by examining these assumptions, you know how you're going to handle it. So lastly, if you've sat through this whole thing so far and thought, if only I had a pair of red slippers, I could click my heels together, go back to last year, and know what I actually spent in April and earned in April or June or August once I got busy. Hey, number one, you're probably, if you aren't an excellent record keeper, you may be going through your receipts and invoices right now. Great time to add a date to those. Don't just hand them all over to your accountant in a pile. Your accountant will like you better if you categorize that stuff a little bit. And seeing what your dates were would not be a bad thing. This is a good time to start that. However, Maybe your New Year's resolution is to keep better records. It will help make your future predictions better. It will help you understand how your cash flows through your business. And if you want a loan for a shiny new tractor, they like knowing you're going to make money, and having past evidence of that is an excellent way to convince people to give you money. Records you need to keep: your sales, your deliveries, your bills, any receipts, your bank statements. I'm not saying you have to print it all out and put it in a folder in a file cabinet like the one behind me. I don't think you can see it, but you do need to have your bank statements. And if you do the very most simplistic thing of budgeting, you'll be using all those things on the left to get to that thing in the middle on the right, the budget. Your inventory. How much do you have left at the end of the year? Some of you are like, none, I sell peppers. We don't do, like, they're not here now, it's January. And some of you are like, I've got frozen sausage in the freezer from that hog I had, processed, and I plan to sell and, at the farmer's market this upcoming year. Or I have a buyer that is going to put my sausage on pizza. Know how much inventory you have at the beginning of the year. It's a really great idea to take inventory at least once a month. Other things to keep: if you have timesheets or personnel records. Lack of documentation for personnel is far worse than not enough, than too much documentation. Any legal or loan documents? A budget. Like, if you've gone through any of this far, like, that cash flow is just too much, make a budget. Then think about how you're going to meet that budget. And what I don't want you to do with that budget is to stuff it in the bottom of a filing cabinet or a box. I want you to look at that every once in a while and see how you're doing with it. Any equipment manuals and any spray or fertilization or any spray records or production records. So, not what we're concentrating on tonight, but it will help you for the future. Have an organization system. Have a place to keep them. It doesn't have to be a beautiful black 4-drawer tall filing cabinet. A nice little box will work just fine. Have something that makes sense for you. Have a system that creates efficiencies for your management. If you try to use something that works for somebody else, it may not work for you. Some people use files, folders, boxes, binders. I'm surprised at how many people can use binders because they just put it in there and then it's in there. You can need to have them out by year. A lot of people will just start a new box over at the beginning of the year. The type of record, if it's a buyer, the vendor. If you're purchasing something, the vendor you purchase from, or a file for different people who bought from you, and your personnel records. I actually gave out at a workshop on Saturday 2 manual ledger books because people try to force themselves to use computers, and in reality, they like to write things down on paper. And I enjoy that as well. So I actually gave out manual ledgers. They're pretty cheap. You can buy them. If you don't happen to see me somewhere, I usually have a couple of extra. A spreadsheet, Microsoft Excel, or a Google Doc. I have a lot of people using Google Sheets. And when I'm doing business management, when I'm doing business planning with them, they like it because they can send me a Google Sheet and I can see updated how they're doing, and we can go through their numbers in real time together. Software, some people use QuickBooks, especially my farmers that have employees tend to use QuickBooks because it has software to help you with paying employees. And then also a point of sale system, many people use Square or ShopKeep or some variant of, so those do help you keep your records. Pen and paper, it's low cost. It's easy to use if you don't have a lot of expense in it. The more things you have, the more a ledger sheet is not going to be very fun. You have to manually add it up. That is the downside of using paper. Expense entries should include a description, the date you incurred it, the amount, and who it was paid to. The profit entry, which is income, should include the income, the date, the amount, and who you sold to if applicable. Sometimes it'll be like we sold to Jolly Jim's restaurant, and And sometimes it'll be $500 in sales in the farmer's market. So it depends on, but you just need to know where that came from. It should just be $500. Who knows from where? Who knows when it got here? Google Sheets are good because they're free, and if you have a decent sized phone or tablet, which many of us walk around with tiny supercomputers, you can use it. You can collaborate with business partners and staff. And it's free storage. Lots of add-ons. You can do formulas. I actually have people who use Google Sheets and ask me to help them with their formulas. Microsoft Excel. It's a little more limiting. Excel is not as user-friendly as Sheets on your phone. However, if you want to do some real fun analysis of data, Excel is great. I should have mentioned Excel is not free. Google Sheets is currently free. The cost of that is probably that they're mining your data a little bit, but they're probably the value of where you bought clamshells is probably not very high. It's not what they're looking for. So here's the two examples. This is actually a generic blank financial sheet that we've used as a profit and loss statement. They haven't entered anything in there. You can see they have their sales, their cut, and then their cost of goods sold. They're gonna have their gross margin on the bottom. And then here's assumptions from an Excel spreadsheet. Getting ready to do some financial projections. So you've got your income, your cost of goods, and your operating expenses. So actually this is the income statement. So this is actually the basic template we use in Excel when we work with people. QuickBooks, you've got online and desktop versions. It can help you track income, expenses, make invoices, track sales tax. If you want, you can integrate it with your bank account so you can go through and actually reconcile your checkbook, which is an excellent practice for you to make sure that everything that you have paid went in and everything also came out. And lots of integration with other apps like Square, Shopify, PayPal, T-Sheets, time tracking, which I've not used, but I hear good things about, and more. So the fact that it integrates well with these other apps makes it good. The biggest problem we have with people that use QuickBooks is they don't set up the accounts so that it makes sense to them. They just go with the generic what QuickBooks has. Take time to go through and make sure stuff makes sense. T-Sheets will help you track employee hours and it connects with your QuickBooks. Ag Squared includes almost all of your record keeping. It is not free from my memory, and it's all on farm management. It includes your production and your expenses and sales and all those things. Tend is specifically organic farm management. If you want to get like really in the weeds, I recommend Veggie Compass. It will, if you could track 2 or 3 crops through Veggie Compass, it will help you understand your income on those crops so much better. Beat Clock is really cool because it can track your labor and equipment hours. So how many hours do you have on X, Y, or Z? And if you think about your repair and maintenance schedule, not a bad thing to have. All right. And that brings us to the end. We've gone over the basics of understanding your farm financials, going through creating kind of a monthly financial forecast, thinking through things that can come up, looking at lean points, thinking of ways to mitigate certain circumstances, and being prepared with what you're going to do if you have an unexpected expense. So my name is Marissa Christie. I thank you for your time. We are happy to help you develop a record keeping system and work through developing your farm financial statements. My email is mcristie@kcardky.com. My phone number is 859-550, actually this is their general K-Card line, 859-550-3972. And you can find us online at www.kcard.info. All right. I hope you all had a great time. I tried to make it interesting. Working on farm financials, and feel free to contact me. That's what we're here for. It is literally our job to help you with your numbers, and if they're scary, make them not quite as scary, and help you think about how to manage them. So good evening, and I hope to see you at our next webinar.